Infosys, which is going to declare its numbers tomorrow. Sunita Nagpal joins in. Sunita, what's the expectation from Infi?
Well, as far as the quarter is concerned, if you look at the numbers, it's expected to be a great quarter for them. We are expecting 2.5% growth in terms of dollar revenues. In constant currency, it will be more than 3%. Volume growth is expected to be strong after the Q1 that we saw a strong volume jump. Pricing will remain soft in this quarter as well. There will be some hit because of the cross currency. As far as margins are concerned, because of the rupee depreciation, there will be some cushion for the wage hike that kicked in this quarter. So we are expecting only 10 basis point improvement, while for other companies it might be much higher because they won't have wage hikes. But in case of Infosys, it will only be 10 basis point higher. Net profit growth is expected to be about 10% in this quarter. But the main focus will be on the guidance. Remember, the company has given a guidance of 6 to 10% going forward in the current fiscal. But if you look at the Q1 performance and the likely performance that we are expecting in Q2, the ask rate will be very, very low. So there is expectation that the company will up the guidance to roughly about 8 to 11%. So the upper band is likely to be up by only 1%. That will also mean that the ask rate will be just 1% going forward in Q3 and Q4. So there is hope that the management can be optimistic going forward. The second half performance will be better than expected. But having said that, you have to remember that the performance of the stock is very, very volatile on all the results. If you look at for last 8 to 9 quarters, the swing has been very, very sharp. The swing is roughly about 11%, ranging from negative 21% to positive 17%. So we'll have to wait and watch what the commentary is, what they do for guidance, and how the performance is in this quarter. If you look at the analyst estimate, they are looking at 2.5% growth in revenues in dollar terms, and margins increasing by only 10 basis points.
I think the expectation really is the transformation that's taking place in Infi. And while we don't have a clear handle on that, but I think you'll hopefully see some announcements coming through at the time of the quarterly results, because as you've seen a series of departures, and obviously these are not natural departures necessarily. They seem to be part of an ongoing restructuring that seems to be underway with Narayan Murthy taking charge and having a team led by Rohan. So I think it's an interesting stock to watch, to see the steps that the new management seems to be taking.
We are not very optimistic that the turnaround can be very sharp in terms of the management change there. I think what Infosys requires is a bit of a business model change. So you will see confusing signals coming out of Infi over the next 2 to 3 quarters in terms of the trade-off between growth and margins. Right now, at this point of time, I think the stock is in a fair value zone. So we would actually be advising clients to take money off Infi and deploy them in HCL and TCS and even Tech Mahindra.
We're expecting a very good quarter, and I think expectations have been catching up with Infosys, but there's still mixed views on the street because of changes in terms of senior management changes. And I think you've got a number of things at play in Infosys, both the end market conditions, the currency, but also signs of internal improvements, better confidence within management, better in terms of the internal collaboration between the delivery side and the sales side is improving. So I think there are a number of levers there which make us confident you're going to see a good quarter and probably a sustained period of improvement from Infosys, not just a quarterly improvement.
I think in general the IT services pack should report good numbers. I think most of these companies would be aided by the severe rupee depreciation that we have seen. Many of them have hedges on their revenues. They hedge anywhere between 30 to 50% of their revenues. Therefore, those hedges could actually lead to some losses being booked below the EBITDA line. But the operating numbers should be really good.